Here's something you never, ever want to do when it comes to life insurance and your kids. Hey y'all, I hope you're enjoying this quick episode. I just wanted to let you know that I have a course called The Purpose of Money Maximizer that teaches you how to maximize and leverage life insurance to invest in real estate and leave a legacy for your family. When you get this course, you will learn all you need to know to build wealth through life insurance, which is tax-free income when inherited by your family after you die. The best part is, for my birthday and through the month of September, I'm offering this $400 course at a deep discount of $40 just for you because I want you to know how to leverage life insurance. So if you're interested, click the link below and get the course ASAP because the price is going back up soon and I don't want you to miss out on this valuable information. Check out the Purpose of Money Maximizer and let me know what you think. What's up, y'all? My name is Aquania Escarne. I am the creator and founder of The Purpose of Money, a platform that teaches you how to build wealth $1 at a time. Today in this episode, we're going to talk about beneficiaries on life insurance policies and why it is so important that you get this right. I've recently been working with a lot of new clients to get them life insurance, and they have constantly said to me, I want to leave the money to my kids. I want to leave the money to my kids, which, trust me, that's all fine and good until it goes wrong. Here's what I mean. Life insurance should not be left to minor children. Anyone under the age of 18 in most states is going to require a trustee or a guardian to take ownership of that money, or the life insurance company could choose not to give it to them until they are 18 years old. Keep in mind that most of us who are parents who get life insurance for the sake of providing for our family until they can provide for themselves don't want the money not to be inherited if we die too soon. So in order to protect yourself and make sure your kids get the money they need, one of the best ways to leave money to minor children is to establish a trust and leave the life insurance to the trust. You're going to put someone in charge of the trust, that will be your executor of your estate, and it will be their responsibility to properly allocate the funds to your minor children in the way that you prefer based on your will. But life insurance companies are required by law to follow whatever you've put on the beneficiary form at the time of your death. So they shouldn't even allow you to put kids, but sometimes people do it by mistake or not really realizing the consequence they're setting themselves up for. So my advice to you is work with a professional life insurance agent like myself. Go through what it is that you need so you have enough insurance, and then make sure you set up estate planning in a way that properly leaves this money to your children in the event you pass away while they are still minor children, because we want them to have this money when they really need it. This is super important. Another thing that I want to warn you about is being very clear and specific on your beneficiary form. In the event you're unable to set up the trust until after you get life insurance, that's okay. But in the meantime, leave the money to a responsible adult who you can trust to give the money to your children. That could be your spouse. It could also be someone else who you intend to hire as the executor of your estate and you trust to handle your affairs. This will ensure that the money is inherited by an adult, and therefore that adult can be instructed to give it to your children as you wish in your will or according to the conversations you've discussed, right? But it protects the life insurance company from not being able to give it to your children because they're minors. Understand? I hope that makes sense. So if you're in a position right now where you need life insurance because someone depends on you for income, definitely go ahead and get it. But if you don't have a trust set up yet, that's okay. Leave the money to an adult you trust, and it's always great to use spouses or individuals who you plan to hire to do your estate planning anyway. The second thing to think about is you need to be updating your beneficiaries on a regular basis. Anytime you have a life-changing event, like a marriage, like a divorce, or the birth of new children, you should be updating and reviewing your beneficiary forms on your life insurance and all of your financial assets. Then you want to make sure that you are clear and specific. We have the ability to write names, social security numbers, and in some cases, even contact information for our beneficiaries on most life insurance applications and beneficiary forms. The more specific you are, the better it is for you because it ensures the money goes to the right person. But there are a few policies out there where maybe the language says all of my children or all of the children of the deceased, right? That is not specific. And if you think about a situation where, let's say you have a marriage, you have 3 kids, you get a divorce, you go get married again, you have more kids, or maybe you even have stepchildren, right? That you also intended to leave in your final affairs and will, and you only wrote my children on a life insurance beneficiary form. In a situation like that, a stepchild who you may have brought on to be your own and loved as your own would not be eligible for any of your life insurance money because they are not your children, right? So whenever you want to be specific in who you leave money to, it's always best to include a name, a social security number, and even contact information whenever possible, so there are no questions as to who you are leaving this money to. I hope these tips were helpful. Remember, never leave life insurance to minor children. Always update your information after life-changing events, and contact me if you need any help reviewing or getting life insurance for you and your family. Until next time, keep building generational wealth. Bye-bye.